on that as well. But yeah, Pines, let's jump off here. What's kind of the lay of the land on market structure? I know there's been a new draft bill from the Senate Banking Committee, and then we've also seen a framework from Senate Democrats about kind of what they're looking for here in that bill. But yeah, just kind of curious where we're at and how long you see that taking to really come to a conclusion.
Yeah, I guess maybe I'll signpost kind of the structural progression we've been on, and then I'll tag Zach in and kind of zoom in to clarity. The signpost I would draw is like Trump gets elected, executive orders establish the strategic Bitcoin reserve. They have president's working group on digital assets. They start cramming on Genius. They get Genius passed, bipartisan vote. They then release the president's working group of digital assets sort of synoptic report, which was in just before it was like end of July, and that was kind of the milestone book report, essentially covering the waterfront. We've talked about that before and kind of teed up additional priorities to kind of drive action, but to implement Genius Act, refocus congressional attention on market structure, and then potentially make good on this uh, left hanging promise to identify budget neutral ways of adding additional Bitcoin to the strategic Bitcoin reserve. And so we're kind of in the middle of that arc, and it's not clear like when or if different threads are gonna get tied together, right? I'd say like my top level macro view is that market structure is not a done deal, although more likely than not, but not as I think people were expecting in some optimistic corners, like rapid action September, October. I think it's more likely to take a lot longer. At the same time, I think the prevailing mood is that action on the SBR essentially is dependent on progress on market structure first. And so, SBR in terms of taking up action, from the White House's perspective publicly, and then and legislatively is kind of an if then, right, relative to market structure. That's not to say there isn't further action, I think, happening on SBR related kind of policy discussions inside DC, but it's not like the top priority right now, right? And so that's kind of like the waterfront summary view here. I think folks were kind of off in the summer. August is kind of a dead zone in DC, and now we're back in session, and things are kicking back up with a high tempo. And that's a good segue to Zach to discuss what the Democrats just dropped the other day as sort of the shot across the bow, a statement of principles from their perspective on market structure. It kind of sets the tone for the negotiations that are now taking place both between the House and the Senate, as well as within both houses between different camps.
Yeah, absolutely. So the Democrats put out, I think it was a 6-page document outlining their sort of high level principles for what a market structure bill should look like. It was mostly fluff. I mean, to be honest, it's a step in the right direction. It's a lot less fluff than Crypto for Harris was, which was, just entirely sort of principles that are untethered from policy. Here, at least, there are sort of nods in the directions of policy. And overall, it's notable in that it is supportive of the digital asset industry writ large. It recognizes that digital assets are important, that there are jobs to be had, that there is economic gains to be had by embracing Bitcoin and crypto, that we need to figure out the sort of securities versus commodities questions for token launches, which is maybe not so important to Bitcoiners. But then also, I think the important point that we need to be able to integrate a blockchain into our existing securities infrastructure, which is something that is both important for broader crypto, but also for lots of things in Bitcoin. If we want to have a sort of native Bitcoin-based token exchanges, if we want Bitcoin itself to be able to trade on major indices, if we want deeper liquidity, these are all important things to have. The sort of couple concerning parts of the democratic principles, there are sort of two references, one in the sort of DeFi section and one in the illicit finance section, to sort of vaguely saying we need to deal with bad actors' use of DeFi or people using blockchain rails, in a non-custodial sense, to skirt around the Bank Secrecy Act. And so, there's some version of that I guess is relatively harmless, which is making sure that the people to whom the Bank Secrecy Act applies, because they are regulated custodial institutions, are compliant. That's not such a big deal. Or, there's another way to take that, which is to expand the reach of the Bank Secrecy Act and then try and regulate DeFi as sort of a regulated financial entity rather than as a pure peer-to-peer infrastructure, which would be really problematic. So that's an important thing to keep an eye on. I expect that that is going to be a sort of big point of contention, especially coming from the Elizabeth Warren wing of the Democratic Party around the sort of existing Clarity Act framework. But we'll see. Putting that aside, I think that the sort of the principles that the Democrats put out, with the exception of the section specifically about Trump and his family and, advocating for language that would cause essentially the Trump family to have to divest from crypto, I think this gels with the existing Clarity Act pretty well. And so I think like where it differs, is this Trump language and then potentially sort of adding Bank Secrecy Act compliance to DeFi. I think these are the two battles we are going to have when this comes up for discussion in the Senate. And these are going to be the two issues that if the Clarity Act is going to make it through, we're going to have to pull over some number of Democratic senators across the line to support these issues. So definitely something to keep an eye on. I think with regard to the existing Clarity Act, I think it will probably come up for a vote by the end of this year. I also think it is more likely than not to pass, but definitely not a done deal. And there is a sort of worst of all worlds here where it passes and does not have the protections for non-custodial developers and just kind of becomes a money grab for sort of token VCs. And we really need to sort of be vigilant about that. The only other part of the Democrats' principles here I think is worth noting, it's not quite about the market structure bill, but they really go out of their way to reaffirm the prohibition in the Genius Act against yield-bearing stablecoins, passing on the interest that stablecoin issuers have to their consumers. So lots of people listening to this will be familiar with Tether and probably even familiar with Tether being basically the most profitable company in the world. The reason they're so profitable is that they are selling dollar-denominated tokens for $1, and they are taking the dollars they receive and investing them in various securities, mostly sort of high-quality paper. A lot of it's government debt, and they're just keeping all the float on that, right? They're making free money on a sort of stablecoin base of now hundreds of billions of dollars. It would seem logical that there should be competition in the market to share some of that revenue to encourage people to hold, X stablecoin instead of Y stablecoin. You can absolutely still put in customer protections to make sure that the yield isn't coming from a shady place like we've seen with previous sort of algorithmic stablecoins. The reason that the Genius Act disallowed this kind of sharing of the profits is because banks have very powerful lobbyists, and banks are worried that if you can hold a stablecoin and make good yield, why would you ever deal with a sort of depository account at a bank where it is a sort of nightmare to deal with them and you're making less money on your money? So this is definitely, I think, naked protectionism from the banking lobby, but it's interesting how prominently that shows up in this Democratic statement of principle. So another thing to keep an eye on there. But, all of this TLDR, unclear whether this document from the Democrats is hostile to the sort of non-custodial developer protections. We'll find out later this year, but my expectation is still that the main fights are going to be about illicit finance, including the regulation of non-custodial tools in DeFi. And then there's going to be a large fight about perceived sort of corruption by the Trump family, by the Republicans, having to do with crypto, because the Democrats see that as a good political issue and a fight that they want to have in public.